Hey guys, so I want to do a very detailed analysis of the crypto market today. I think it's a good time to like really dig deep. And the first thing I want to know is what really happened. I want to know what is true. And I think this should always be the starting point of what your thinking is. What we should do is try and be scientists and see what is really true, and not like astrologers who are collecting evidence to support our confirmation bias. So what I don't want to do is go and collect a bunch of evidence saying crypto is all good and then ignore the evidence that says it's bad. I want to look at the evidence objectively because I want to know the truth, because I don't want to lie to myself. I don't want to fool to myself. And to start with, let's try and get the question right. So the real question, and the question I want to answer today by looking at the evidence and not just by bullshitting myself, is the bull market over? Like, is that the end? Is that the end of crypto? Is that like, is it over? Are we all fucked? Did we make a terrible mistake? And if it's not over, we get a lot of clarity about where we're at. So let me start with some price action stuff. I think that's a nice place to start. So let's bring up a chart of Bitcoin. Okay, so let's look at what happened. So this year we have an incredible bull market. These previous declines weren't particularly painful for investors. It was just like a normal, healthy pullback type thing. This is the first really gut-sucking moment. So what happened here? We've gone from 65,000, almost 65,000, down very briefly to a low of 30,000, which is 54% peak to valley. But when we dig into it, when we look at the hourly chart, it really only spent like 2 hours below 40,000, and then it sort of recovered. So below 35. So really the peak to valley is 35 from 65. Still bad. Now, let's talk about what we're looking, the question is, what we want to know is this the end? Is it just going to keep going down and go down, 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 back below 10,000? Like, that's what I think at the heart of what everyone wants to know is that. So the first thing I want to do is I want you to look at every candle on the screen and tell me what stands out about this fucking bitch right here. What is it that stands out about this cocksucker? Is really biggest fucking thing on the chart, right? Going way back for years and years and years. Well, not years and years and years, until the coronavirus crash. That was a big candle. That was a fuck off candle. And so we've got the biggest candle since the coronavirus crash. Is this an exact bottom? This is what bottoms look like. We know that bottoms are people giving up, capitulation. In fact, let's go back to the coronavirus crash and let's have a look. That is a giant cocksucker of a candle. And that was not quite the end, but just about the end. It was like it hovered around there. And this kind of bullshit where it hovers around there, that's a possibility for us here. But I think, look here, this is the crash this is the coronavirus crash. Sorry, my bad. You can see the biggest candle on the whole thing. That was the bottom. It started to bounce after that. So one of the things we know about markets, and I can just load up market after market after market, is that when you see a giant candle like this after a bearish move, that's nearly always a capitulation bottom. That's always a turning point. Now, how am I going to do this? So we're down, as it stands, around 40% from the all-time highs in Bitcoin. So these types of this is a non-trivial drawdown. I don't want to laugh it off and say, oh, that's nothing. I'm an OG or whatever. Like, that's not true. That's not living in objective reality. That is a significant and painful correction. I got several calls from students and friends of mine freaking out yesterday, and doesn't feel good. If you haven't had experience with that, boy, can really hit you right in the feels. It can distort your whole reality. It can make you do dumb shit and cash out right at the bottom. Back to living in reality, we do not have the right to get Bitcoin going from $5,000 to 65 grand without experiencing any emotional pain at all. We get paid as investors for assuming risk. You cannot expect to make 1,000% returns. You know what a great fucking year for the stock market is? Like 30% is a banner year. Like they're paying themselves $1 billion bonuses for 30%. You know, I had a 60% week 2 weeks, 63% week 2 weeks ago. You know, you cannot expect easy up and not easy down. That's not living in objective reality. So we have two ways broadly that bull markets end. Bull markets, let's look at some other bull markets in crypto. Let's go back to the old school. So this is the 2017 bull market. You can see that in the final month, it made 60% of its gains in the last month. Let's find the 2014 bull. The 2014 bull, this one, made 90% of its gains. No, that's the 2013. The 2014 bull made 90% of its gains in the last 30 days. So we have two ways that bull markets end: with a bang, blowing their load, like the 2013 bull, 90% of its gains in the last 2 weeks. And all these little wiggles that you can see here, they were the same. 90% of the gains the last couple of weeks, from like $7 to $16 and back down to $7. But that's how crypto tends to go. Is there a reason for that, or is it just random luck? That's an interesting question. The reason crypto is prone to blow off tops and incredible crashes is there's this great quote from Nassim Taleb that a good way to tell a sucker in the markets is he's focused on the size of the movie theater and not the width of the door. The doors in and out of crypto to real money are very, very small. Only a small fraction of exchanges accept real money. I tried to deposit money on exchange yesterday. Motherfuckers, I've got this fucking support ticket bullshit. Oh, they haven't got my deposit yet. I'm trying to transfer 100 grand on exchange, and they're like, it's just too slow. All the people I know who are trading crypto were trying to buy us. They couldn't get money on exchange to buy. Binance crashed briefly. The door is very small. So it's difficult to get your coins on exchange to sell them. And it's difficult to get, once you sell them, it's difficult to get that money out into real money. So that friction almost guarantees that with crypto, we have blow off tops and capitulation bottoms. We never have. Look at the run up to here to the top. Did this make 90% of its gains in the last 6 months? Did it? Did it? Fuck. No, it didn't. Now, I just want to show you something that just occurred to me. Google Trends is like a pretty neat, like dumbass way of measuring mass market hysteria. So let's look at Bitcoin as a search term. And let's look at how many people have been searching for it. This will be a good indication. If we're at a real top, let's go past 5 years. Okay. So people are searching for Bitcoin at a lower rate than they were really in 2017 right now. It briefly spiked above, but that's not what I would expect to see at a real top. So let's look at buy Bitcoin, which is probably going to be a better indication. And let's look at Let's look at 5 years. So the top in 2017, we're not seeing people like frantically trying to figure out, how do I buy Bitcoin? At the eventual bull market top, let's look at Ethereum. So where are we with Ethereum? We're still below where we were in 2017. People searching for Ethereum. So I would expect at an eventual blow off top bull market capitulation end, I would expect to see people quitting their jobs to become crypto traders. I would expect to see search terms through the roof. I would expect everyone in the world, not just my crypto buddies, to know the price of Ethereum and also a bunch of other coins. I'd expect them to know Polkadot and all that. We don't quite have that. Like we have it taking off, which is a good sign, but we don't have that extreme, it's about to fuck itself sort of character, is my point. So we have this bull market ending with this bull move ending with a whimper. And that is very unusual. So to me, this supports the hypothesis that this is just the end of the beginning rather than the beginning of the end. And I think that's objectively what the evidence supports here. Now, what else supports that evidence is the fact that we've got very, very strong buying pressure here from 30,000 up to 40,000. That's a 30% gain overnight. Like, it doesn't look like much, but that's a 30% gain overnight. People who had the balls to stand in the middle of that torrent of selling yesterday and just mash the buy button, took big balls, and they've been rewarded for their courage. I think that's important to acknowledge. So either the whole structural dynamic of the crypto market has changed and we're now just like a regular boring old man market like stocks, or we still got a blow off top ahead of us. And I think that's important to acknowledge. Now, let's look at the short-term price action and the microstructure around that. So let's look at the 5-minute chart. So one of the things that we should be seeing at a market bottom is massive candles towards the bottom. Now, let's look at the last couple of days. Look at the size of these candles. And these are still big candles, mind you. This was still in the middle of the crash. And even for a crash, like I was sitting at lunch with some people here and thinking, wow, that's a savage crash. I wonder if this bottom's going to hold. I thought this bottom would hold. So I thought this would hold, didn't hold, thought this one would hold. This one, look at how big these are 5-minute candles. These are monster candles from 33,000 down to 30,000 in 5 minutes. Like, that's unprecedented. That's insane, crazy. And what happened then? One of the things we know at eventual bottoms is we see big candles at the bottom. We see strong buying pressure. So in the space of an hour, we did a round trip from 37 down to 29, 37 down to 30, back up to 37. That's a hell of an hour. Imagine how that felt. Well, most of you were watching, so you probably know how it felt. It felt like, oh, fuck, we're going to die. And then, oh, fuck, maybe it's over. And fuck, oh, fuck. Ah. So it's a strong emotional thing. Now, traders can't sustain that level of emotion forever. Once emotion reaches an extreme, that's usually the end of a directional move. Okay, so I think the preponderance of evidence supports the idea that this is a capitulation bottom. Whether or not it fucks around and retests this, that wouldn't surprise me at all. So what we get now is what do you want as a trader? If you say that I want Bitcoin to go up, you're a fucking idiot. You're just a fucking fool. So what do you want as a trader? Bitcoin's going to go up, Bitcoin's going to go down, Bitcoin's going to do its thing. What do you want as a trader? You want the bull market to go on. And second thing that you want is you want to have an exact point where you know if you're wrong. Now, it's only children who say Bitcoin goes up, it's good, Bitcoin goes down, is bad. good news, big Elon good, Elon bad. Like you're a fucking imbecile and an infant if you think that way. You need to check your thinking. You need to wash your brain out with soap, and you need to start thinking like a fucking man and not an imbecile. If that's your if that's the level of thinking that you're bringing to the table, you're just not smart enough to play this game, and you need to fuck it off and do something else. So let's talk about what kind of clarity we get from this. So the clarity we get is that if Bitcoin goes below here and closes below this point, that would shake my faith in the bull market. I would think that would be extremely damaging to the bull thesis. So am I here saying the future's set in stone and it definitely has to do this, this, and this? I'm not a fucking fortune teller. My crystal ball's broken. I wouldn't fucking know. Neither would you. Neither does anyone else. No one on Twitter knows. Fuck them. Fuck them. They don't know. So how do you figure it out? You try and be logical and you try and be objective. What is objective? Objective is, where did we stop here? Let's edge across and go, okay, we stopped about the same where previous things stopped. So what did that do? It shook out everyone who basically bought from about January. So everyone who's played the game this year thought they had a great run, thought they had fucking hell of time, I'm getting rich, fucked them all. Everyone who was late to the party who bought, everyone who bought in the last couple of months is underwater. And we're going to explore that in a little bit, in a little while. But what needs to happen for Bitcoin to get to 200,000 or 300,000 is all those easy game motherfuckers who think that crypto trading is easy to get shaken out, because the guys who got shaken out yesterday, they're the ones who are going to buy back in at 150. They're the ones. So explore the psychology a little. If you're one of those guys that you just couldn't handle the pain and at 35,000 you sold your shit, you mashed the button. How do you feel about Bitcoin now? You hope it crashes. You hope it never comes good. You hope everyone loses. You hope it's fucked for everyone because you're a hating cunt. It's human nature. That's what happens. That guy, when he finally sees it's recovered, oh fuck, it goes to 100. It's like, oh, it's going to crash. Don't worry, it'll do that shit again. It always does that shit. At 120, he'll go, oh fuck, it's going to crash. It's going to crash. At 150, he'll go, oh fuck, now it looks good. Now I have to buy in. And that'll be the top. So we get a lot of clarity around this bottom. Close below this bottom, the whole bull thesis goes from being 75 to 80% chance to a 30% chance. That's just the reality of it. Okay, so what else can I talk about? Let's look at some on-chain analysis. I think that before we do that, our system is holding these egregious shitcoins, like terrible kinds of things. Let me see what the system's holding. And so what we saw in the last couple of weeks was this situation where the market was frothy and garbage was floating to the surface. So look at these terrible, terrible coins we're holding. Doge was up 13% last week. Ethereum Classic, God, what a terrible thing. Bitcoin Cash, I can't believe I own anything with Craig Wright involved. It was up 2%. XRP, nothing worse in the world. 18% gain. TRX, shitcoin, it's a shitcoin, 5%. So we did 7.69% against Bitcoin last week. This week, we sold TRX. We're holding Doge, Ethereum Classic, Bitcoin, XRP now. So let's go through those one at a time. And I think the question that we ought to ask ourselves is, are any of these fucked, or was it just Bitcoin crashing? And I think that's a really good question. So let's answer it. So Doge was probably the hottest meme stock thing, and it got fucked. It got fucked well and truly, but look how it recovered from like 655 up to 894, up 30%. It's back where it was 1, 2, 3, 4, 5, 6, 7, 8 days ago. You lost 8 days. Big fucking deal. Let's look at Bitcoin Cash, which is clearly the worst of all the things we held. It really took it in the ass, mainly because it's Bitcoin as well, and it's highly correlated to Bitcoin. But where are we? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18 days. You've lost 18 days of profit. Yeah, who cares? What else have we got here? We're holding Ethereum Classic. I don't know if there's a worse coin. And we're holding it. It also got butt slammed and it's recovered. You've lost 1, 2, 3, 4, 5, 6, 7 days of profits. Big fucking deal. We had the thing went up 300% the last couple of weeks. We were holding it. Big fucking deal. You know, where are we back to? We're back to this day. You were super happy here. We're in the same day. You know, a couple of weeks later. What else are we holding? XRP. Oof. That is a surprisingly good chart for a crash. Look at XRP. It's going up, steady pullback, going up. We're back down to 1, 2, 3, 4, 5 days of profits wiped out. Big fucking deal. If you can't handle that, this is just not the game for you. And that's just the truth. Let's look at Mana. I haven't looked at that. That was a pretty significant hit. Big recovery. Where are we back? We're back to where we were a couple of weeks ago. Not great, not the worst. Could be worse. Not terrible. So I think what's objectively true is that altcoins took a hit, but really the cock punch was in Bitcoin. I think that's objectively true. Let's look at some of these higher Momo alts. Let's look at things like big hit, but again, recovered pretty well. Sushi. Big hit, but that was, it just wiped out 1 day of profits, really. Like 1 day. ADA. Significant hit, strong recovery. Where are we? 1, 2, 3, 4, 5, 6 days of profits wiped out. Yeah, if you can't handle that, you can't play the game. What else is a hot coin? Polkadot. More significant hit. Wiped out a couple of weeks' profits. It's a couple of months' profits, really. Matic. So what are we seeing a pattern of? A very strong recovery. Matic is back to where it was a couple of days ago. No big deal. Like if you can't handle going back to where your position was in Bitcoin terms a couple of days ago, this is not the game for you. So what else should we talk about? We should talk about, I know what we should talk about. I need to explain to you exactly how and when the news can affect the market. Because there's all this shit about, Elon tweeted and it crashed the market. If Elon tweets way back here, it wouldn't crash the market. Elon, under what circumstances can Elon push a pebble off the cliff that starts rolling and knocks some other rocks over and becomes an avalanche? Under what circumstances can a little thing become a self-perpetuating avalanche? Let's think about what's actually happened. In this dip, when the market went up like this, and when there was a bunch of people on the side, we've always got three groups of participants in any market. We've got bulls and we've got bears, buyers and sellers, and we've got motherfuckers on the sideline. And these motherfuckers on the sideline, they're always either haters hoping that it's going to go down or looking for a time to get in. So this first dip, all these motherfuckers on the sideline like, oh fuck, this is what I've been waiting for. I really want to buy that shit. It's on sale. Very constrained, comfortable dip. And what's more, let's look at the character of this first dip. This first dip wasn't all crashy. This is like up, down, up, down, up, down, up, down, like zigzagging down. That's not an uncomfortable thing. That's not crashy. And you can see in a small way, it got like small for here, it got a little bit crashy at the exact bottom. Because that's what we should see at exact bottoms. Like here at the exact bottom, it got a little bit crashy. Here, it got a little bit crashy. That's what you should see, like the signs of crashing at a bottom. Let's look at this next one. It's just edging down. It's getting small. It's weakening on the way down. So what this tells us is that there was guys who wished they bought it here. It's like, oh fuck, I've got my chance. I got my chance to buy Bitcoin at 43. I'm jumping. So when does that stop? That stops, obviously, when all the sideline guys have said, fuck it, I have to get in or I'm going to miss out. And if you ask yourself, when is the point when the sideline guys finally admitted to themselves that, like, if I don't get in, like, this bull market is on. It's unusually clear that this bull market is on. If I don't get in at $65,000, I'm going to end up paying 200, and it's going to be fucked. I'm going to miss out, and everyone's going to laugh at me. When all the sideline buyers are in, there's no one to prop up the market. So when the market started to fall, this rally here soaked up some buying pressure. And when we got to the top of this rally here, all the buying pressure is soaked up. So at this point, right here, this is the turning point. Everyone who had the capability or wishes to own cryptocurrency had their bags full. They owned as much as they want. Everyone's set. By 10th of May, I think it's objectively true to say that by 10th of May, everyone who wanted to get positioned was positioned. So what does that mean? When everyone's positioned that wants to get positioned, if the market falls, who's going to buy and prop it up? Like, this isn't the stock market. In the stock market, if the stock market starts doing this bullshit, what happens is Janet Yellen gets on the phone to fucking Jay Powell and at the Fed and they print some money and they announce some bullshit and they start buying it with the plunge protection team and Jamie Dimon from JP Morgan starts buying it and they all get on. There's no one to do that. There's no one who cares in the crypto market. And in fact, the crypto exchanges, they want you fucked out of your position because they're just going to buy it back here. True. So why was this crash so big in such a short period of time? It's because all the buying pressure was soaked up. Everyone was already fully invested. What causes the end of the crash? When all the guys who were pussies got puked out of their positions. And we've got to decide, does the evidence support that hypothesis or a different hypothesis? And you know, let's start looking at the evidence. So what we have here, this is the average percentage profit of short-term traders. Actually, let's start with Bitcoin. Of Bitcoin. So let's look at the rally. You can see that when Bitcoin hit 55,000, the average short-term trade, and a short-term trader is someone who's held their coins less than 155 days. So we have a situation where statistically there's this enormous gap in character between short and long-term traders. Most people who buy Bitcoins fund an account, buy some Bitcoins, and immediately either start trading for shit coins or give them to someone or buy some drugs with it or do something with it. You know, pay money back to a friend or whatever, send money overseas with it. Like, the overwhelming majority of people use their Bitcoin in a short-term way are very different than the guys who put their Bitcoin in a Trezor or a hardware wallet, keep it off exchange, throw it in their back pocket, never think about it again for years and years and years. So we can look at the differing behavior of those two groups and see how and why they got fucked. So short-term traders here, at this point right here, the average short-term trader profit was 5%. In the last 2 days, average short-term profit went down to 1%, then negative 8%, negative 11%, and now the average short-term holder, as at yesterday's close, 22% underwater. It's very emotionally painful when, if this is still a bull market, and you can see in the previous bull market, it got worse, but it wasn't really a like Donkey Kong bull market then. Capitulation bottoms where people lose money are comparatively rare in bull markets. So I think it's useful to take a look back to, let's take a look at 2017 bull and see what happened. So in 2017, the dips here, this is zero, so this is negative. So they went negative here, they went a little bit negative here. So the average short-term loss was 7%, 6%. In this dip, it was 4%. This dip didn't even get negative. So we have 3 times in the 2017 bull when short-term traders on average lost money. They lost 6%, they lost 4%, and they lost 8%. So this crash today is objectively stronger than anything we saw in the bull market. It's true. It's fucking true. Now, let's look at Ethereum. So, in the coronavirus crash, Ethereum traders were on average 60% underwater, 67% underwater. Boy, that was a painful day. That was comparatively a much more painful day for Ethereum holders than anything in history. In February last year. Now, let's zoom in so we can see it a little clearer. So what we see is at tops, the short-term traders are comparatively 45% in profit on average. And at the lows here, the short-term traders are in Ethereum, because Ethereum's been bullshit strong, still 5% in profit on average. Ethereum traders held up pretty well. Ethereum short-term traders have held up pretty well. Bitcoin short-term traders have taken it in the ass. I believe that the objective evidence shows that to be true. Let's move on. So this is really interesting. So this is coin dormancy. So this is a very interesting concept because everything's on the blockchain and everything can be measured. We can look at the guys selling their coins who are puked out of their positions. How long have they held them? So at the top here, the average coin day, the average coin that had been moved or sold was held for 276 days. So these guys here who bought it who sold it at 33,800, they bought, how many days? 276 days from May is April 20. So they were the guys who bought when it was like $100. They've gone from $100 to $130 to 4,000 and fuck it, YOLO them out, right? Good day at the races. So what we're seeing is the strong hand selling. What do we want to see at bottoms? We want to see weak hand selling. So let's zoom right in. Let's look. The average amount of time, the average length of time that the guy who got puked out of his positions in Ethereum was 28 days. So 28 days from May 19th is the guy who'd been held from about 2,500. Now, what do you notice about this day, 28 days back from this day? Pretty obvious, right? Same fucking price. So what is the psychology that we can deduce happened here? These guys are bought on average here at this price. They've made a heap of paper money. Fuck, they've lost it and they got out for their money back. They're like, oh, that was a wild ride. I don't want to fucking play that game. That sucked. I think that's an objectively true thing. So what can we deduce happened from, let's look, the average person held the coins for 28 days. Go back in time 28 days from May 19th to April, about there. The average price was 2,400 and they sold before they lost money. They're like, yeah, this was a fun game to play while we were winning. I don't want to play if I'm going to lose. And that's a normal human thing. Now, let's compare and contrast with Bitcoin. So let's look at the average coin dormancy. Let's look at a bit longer basis. So the coins that sold here were really quite young coins. They were on average 6 days old. 6 days from April 21 is these guys bought the high and then here they were like, fuck it, I'm out. These guys yesterday, the average coin day was 20 days. So 20 days back from there is roughly here. So what did this dip do? It flushed out all the guys who bought it above 60K, roughly. I think that's objectively true. Now, what I want to do is go back to 2017 bull and let's see how it looked. In the bull market, this first big dip, what happened at the bottom? At the very bottom, the coin dormancy was 5.79 days. At the top, the coin dormancy was 31 days. So it was long-term traders with lots of profit held for a comparatively long time, cashing out. Fuckheads who bought last week getting flushed out. Let's look at the next one. Let's look at the low. Average coin dormancy, 5 days. Average coin dormancy here, this was a weird one. This was 100 days. So I think what you can deduce is that in November 2017, Bitcoin got to 7,000. By the time it fell to 6,000, these guys who'd been holding for a long time said, wow, that was scary, I'm out. What does an exact top look like? What was the coin dormancy was 21 days there. Now, let's look what it was like at the highs. 19 days, 48 days, 33, 27, 40, 68. So this was longer term traders, two and a bit months selling out, 23 days selling out. The guys who bought in back here, they mostly sold here, 87 days. They sold in this first run up. Let's move on. So this is the average coin dormancy. This is a moving average over it. So you can see that what happened is that people who'd held from the very beginning mostly sold into this first run to like 40K. The first dip flushed out the recent guys, and this next dip is similar. So it's all short-term traders. What do we know about people who haven't held their coins for very long is they're weak hands. They haven't got, if you bought your Bitcoin in 2014 for $500, you didn't even check the price yesterday. You are a strong hand. If you bought your Bitcoin 2 weeks ago, you're a weak hand. You're reloading the phone, you're calling your friends, you're checking Twitter, you're a dick. You're just a dick. So let's look at this one. So this is spent output profit ratio. So this is kind of an interesting thing. On the left-hand side, we have the average profit of all the traders who sold their coins. So this is the break-even line. If they're below the break-even line, they're selling at a loss. You should not often see traders willing to sell at a loss if we are in a bull market. If you think about it, that's what a bull market is. Guys think that it's going to keep going, so they hold on to their shit. They suck through the bad times. So when traders cashed out into this first top, their profits on average were like 7%. Traders cashing out on average profits. On average, the traders who cashed out yesterday were at a loss. That is only 2.5% loss. You can see the last time that happened was this. So what do we know? Dips in bull markets. Look at that. It was almost a loss. It was 1.002. So almost a loss, a small loss. This dip here, very small loss, like a 0.2% loss. And this loss is the first significant loss. So if we are still in a bull market, this should hold true. Now let's look at how it looked in 2017. So while Bitcoin made its big move up here, let's look at the big resets. This was the first major dip. It got down to what? 98%. We're at 98.8. We're at 97.5. This is the second big dip. It got to 98.8. This dip here didn't even get below, and then this was the end of the bull market. So at the end of the bull market, obviously everyone sells at a loss because that's what happens at the end of a bull market. You hold on too long, you hit the red, you get ahead, you hit the black, you set you back. I think we should look at Ethereum as well. Let's look at the profit on average that Ethereum traders are making. Let's look at 2017 and let's look at all the way through. You can see these dips in Ethereum in the 2017 bull were around break even. Traders are unwilling to sell. This is break even. And you can see all the way through a bull market, traders are unwilling to sell at much of a loss. In a bear market, sorry, just messed it up. In a bear market, traders are very willing to sell at a loss. And in fact, they sold at big losses, like losses, huge losses on average. And bear market is totally different. Like that normal thing in a bear market is to sell at a loss. And the abnormal thing is to make your money back and make a small profit, make a small profit. And those were tops. Make a small profit, and that was a top. You know, a bear market and a bull market are totally different things. Now, we're clearly in a bull market. Let's look at the bottom. At this bottom in Ethereum, which is the first reasonable bottom, it was the first reset, the first time the average person selling their coins got to zero. This, look at this. 98%. So this is the first time in a bull market that traders have been willing to sell at a loss. So if the bull market thesis is still valid, that should be very close to a bottom or a bottom. Let's move on. Okay, we'll do that. Oh, yeah, this is cool. Okay, so 2017 bull, we had 4 significant pullbacks. 37%, 34%, 41%, 39%, 32%. Lasting 8 weeks, 8 weeks, 8 weeks, 6 weeks, and 2 weeks. What have we had so far? We had a 5 week, we had a 4 week, we had a 4 week. I think, and our real pullback, excluding the hour where it all went crazy, was about a bit over 40%. So is it completely unprecedented? No, we had like a couple of 41%, 39%. We haven't had a big pullback. A bear market pullback would be, this is what happened in the bear market. We got 72% pullback for 16 months. That was like right in the face. So what does the evidence suggest? If we're still in a bull market, we should be looking at the time to make new highs, 6 to 8 weeks, 4 to 8 weeks, maybe give it another week just for good luck, call it 9 weeks max to make new highs in Bitcoin. That's what the evidence is suggesting. So let's look at the net unrealized profit and loss. So what this is on the left-hand side, this is the average, this is when coins are moved or sold. This is the average profit that they're being sold at. This is not coins being moved or sold. This is all of the coins held by everyone. This is their average profit. So Ethereum, and this is just the short-term traders, just 155-day or less. Here, average Ethereum trader held, short-term trader under 155 days had 45% profit. Here, average short-term trader held 45% profit. Now, average short-term trader still in profit, still 5% profit. Now, let's compare and contrast that with Bitcoin. In Bitcoin, the average short-term trader is 22% in loss. So we've got this enormous gaping chasm between the profitability of short-term Bitcoin traders and short-term Ethereum traders. Short-term Bitcoin traders took it right in the face. If you're a Bitcoin trader, you got fucked. Sorry, you just did. Let's go back. In a bull market, we're looking at short-term profitability. The short-term traders, how much unbanked profit do they have? And what we saw is that these significant bull market resets, -6%, -3.8%, -4%. So objectively, 6%, 8%, and 4%. Objectively, for Bitcoin traders, this was more of a butthurt day than we ever saw in 2017. I think that is objectively true. Let's look at the market as a whole for Bitcoin. So I think the thing that we all really want to know, did we reach a fucking top? Like, is that the end? Is the shit all over? Like, should we just pack up our box and dice and go home? So on the left-hand scale is, this is the average profit of Bitcoin traders. You can see at the 2014 top, we got to 75%, which is colored blue. At the 20, that was the 2011 top. At the 2013 top, we got to 78% colored blue. At the 2014 top, we got to 80% colored blue. The 2017 top, we got to 76% colored blue. Where did we get to before this top? That's the big question. We can get anywhere fucking near that. We got to 73%. So we got close, but not quite. That objectively is not nearly as extreme as we saw in 2017, 2014, 2013, or 2011. It is not even close. And so what also do we know about those previous bull markets in Bitcoin? We know that every single one was more powerful than the next one. That's the very nature of Bitcoin bull markets. As more people hear about crypto, it's an idea virus, it's an incredible concept, more people come in. And so each bull market has a statistical tendency every time so far to be stronger and more powerful than the last market. And yet, objectively, we haven't reached the same extremes. I think this is very strong objective evidence that we haven't reached an ultimate top in Bitcoin. Okay. Okay, so this is kind of interesting. So if we look at Google Trends, if I'm searching for Ethereum, I would expect at this at 2017, Ethereum was, oh, sorry, that's on, let's be good overall. Okay, so Ethereum, we have reached a peak in, we have exceeded interest in 2021, that's 2017. Let's look at the same with Bitcoin and see if that holds true for Bitcoin. So in 2017, this is how many people were interested in buying Bitcoin on Google. Like, this is a Google search term. This is on trends.google.com. You can see that objectively, the interest in Bitcoin is strong. It's very strong, but not as strong as it was in 2017. What would you expect to see at a market top? You would expect to see stronger interest. You just would. That would be the way to bet. So, what causes Bitcoin to go to 200K? Serious question. What causes Bitcoin to go 200K, 250, 300? What causes it to get there is people on the sideline coming in and buying, right? The buyers that are in the market now can't push the price up any further than they had. It's impossible. For Bitcoin to make another new high and another new high and another new high, what has to happen is that the guys who bought here have to get fucked out of their positions, and then they have to sit on the side. They have to hate on Bitcoin and go, fuck it, I hope it goes to zero, fuck that. And then Bitcoin gets to 70 and they go, it's going to crash again, it always crashes. Gets to 100, they go, fuck Bitcoin, it's going to crash again. 150, they go, oh, finally, yeah, I think I have to buy some Bitcoin. That's the nature of humans. That's the very nature of things. Now, in terms of fundamentals, and you know, there's a lot of like retrospective explaining of how and why things happen in terms of fundamentals, and it's never obvious until the end. And the point where it becomes obvious is usually the end of a bull move. So I think it's clear that at this point it became obvious that this is unequivocally, by every objective standard, a bull market that looks like being a historic one for the record books. I think that is objectively true. I want you to look at this series of letters. I'm not going to help you. Tell me what's the next letter in the series. Use your brains. I actually want you to think about it for a minute. So I'll give you a little minute to think about it later. feel the tension, like you're trying to work it out. Can't work out why Bitcoin's going up. It can't work out. Like it could be the Fed printing money. It could be just that Bitcoin's amazing. It could be Elon Musk. It could be, maybe it's when, like why is it all happening? Like is it happening for real, or is it just going to crash like before? Like, is it real? So as soon as I explain that this is 1, 2, 3, 4, 5, 6, 7, 8, everyone goes, oh fuck. Oh, now I get it. So what I want to point out to you is that moment where you go, now I get it. Now I know why crypto's going up. Now I know I'm sure that it's going up. That's the end. That's what you're waiting for. Now, how did you feel about the top in 2017? I know how I felt. I felt like it was going to go on forever. We'd reached a new permanent high. That fuck crypto was the new, this technology is amazing and it's going to be a whole new thing, just like the internet was, and fuck banks. And I thought all that too. I was an idiot, but I thought all that. And you should feel impossibly optimistic at a top. And you should feel very pessimistic at a bottom. How do you feel yesterday? I felt pretty pessimistic. How did I feel at the top? I felt very optimistic. Now, this plays out in a fractal nature, again and again and again and again, big time frames and small time frames. The 2017 bull market, let's have one last look at it before I clock off. These things look like nothing, but they weren't fucking nothing. So these are big ass scary drops, 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 big ass scary drops. How many did we have? Like a heap of them, right? The thing I want to point out to you, this is the very first one. This isn't a scary drop. This is just a pussy drop. This is just a buying opportunity. This is the first time that anyone's had a come to Jesus moment about crypto. It's like, oh, I don't know if this is for me. This is a fucking pretty crazy wild ride. This is the first time you've actually had to experience any pain. I'd expect 4 of them. If you don't like this, when you get back up to here, or when you get out to a point you can stomach, you should sell out. Because this is going to happen again and again and again and again. And I still believe we're on track, and I think the objective evidence supports that, for an eventual top a long way above this. I'm talking 3, 4, 5x from here. And yeah, I think it's still good. I'll tell you when it's not. Now, what would make it not good? Close below. It's below here. Close below $30,066 on Bitstamp. So close below 30K, I would think that the Bitcoin bull market thesis goes from 75% chance back to 25% chance. That's what I think. So there you go. That's my detailed thoughts. Hope that helps.